días, gente de Santa Fe, Nuevo Mexico. All over the north. También all over the south, too, man, if you're listening online. Welcome to Suave Radio. We got our good friend Gilbert Varela, Del Norte Credit Union. Muy buenos días, Gilbert.
Good morning. How are you today, sir?
Good morning, good morning. I'm excited, my friend.
I'm excited, too. We got our Golden Eagle coffee going.
Oh, we got our jet fuel for the day.
Got our jet fuel double shot.
Double shot. Well, thank you so much for the jet fuel, Gilbert.
You're so welcome.
It's delicious. I don't know what's in this thing, but is it sugar free?
It is sugar free.
It's
actually.
Sugar free.
It's sugar free with a kick.
Sugar free with the caffeine kick. There.
That's right.
That's a double shot of kicking the como se llama.
Yeah.
Well, I want to say good morning to everyone at Del Norte Credit Union. Obviously to you in your office, to Eric and Linda and all the wonderful people at DNCU.
And I'm sure they're listening and thinking the same of good morning to you too.
Yeah. Well, this morning, obviously, as we said, Gilbert Varela, Senior Loan Officer with Del Norte Credit Union. Gilbert has spent over 2 decades. You don't even look that old, bro.
Thanks.
You've spent over 2 decades helping families across New Mexico navigate the mortgage world, from first-time home buyers to refinancing, land loans, construction financing, and long-term real estate strategies. Gilbert, welcome back.
It's good to be here, especially with the jefe of the morning show.
Well, I tell you what, Gilbert, you've helped a lot of people throughout New Mexico over the years. You know, what are we going to look into today? What are we talking about?
Well, we got a little bit of an action-packed day. So today, we're really breaking down the market and helping people understand what's happening behind the scenes. Well, talking about why mortgage rates move the way they do, why checking your credit every year is one of the smartest financial habits you can have, how homeowners can use the equity in their homes through home economic credits and fixed second mortgages. And then we'll finish with one of the strongest financing strategies we're seeing right now at Del Norte Credit Union, our 10-1 ARM program.
Right on. Sounds like a packed show. Let's get into it. All right, Gilbert, let's start with the mortgage market, my friend. People hear rates are moving all the time. What's really happening now?
Right now, we're still seeing mortgages rates generally in the low 6 to 6.5% range. But what people are noticing is the volatility. Rates may improve one week, then move higher the next week, depending on the economic news and market reaction.
So the rates, they aren't randomly changing?
Not at all. Mortgage rates are heavily tied to the bond market, especially the 10-year Treasury yield. Mortgage-backed securities and long-term lending products tend to follow the Treasuries pretty closely.
So let me see if I get this right. So when the Treasury moves, then the mortgage rates usually move too?
Exactly. If investors demand higher returns on Treasury bonds, mortgage rates usually move higher. If bond markets improve and yields come down, mortgage rates can improve as well.
So what's causing those swings now?
There are several major factors: inflation, the Federal Reserve policy, employment reports, consumer spending, oil prices, and global events and geopolitical uncertainty. And all of those things are connected.
All right, well, then let's talk about inflation for just a second, because people hear that word constantly. You can't go to the store, to the donut shop, anywhere, wherever you go, you hear about inflation.
That's correct. Inflation is one of the biggest drivers of mortgage rates. If inflation stays elevated, investors lose purchasing power over time. So they demand higher returns, and that pushes interest rates higher.
And the Federal Reserve?
The Federal Reserve doesn't directly control mortgage rates, but they absolutely influence them. When the Fed keeps short-term rates elevated or signals concerns about inflation, markets react immediately.
So every Fed meeting matters then? I guess.
Absolutely. Markets are constantly watching inflation reports, job numbers, wage growth, consumer confidence, and the Federal Reserve comments. And rates can move quickly based on those reports.
So then if you're a buyer, what should buyers focus on in a market like this?
I always tell buyers this: don't get trapped trying to perfectly time the market. Focus on your payment, your financial goals, your long-term plan, and whether the home makes sense for your life, because you can refinance a rate later if the market improves, but you can't go back and buy at yesterday's home prices.
That's a good point, dude. That's a great point.
Yeah, so it's not about finding the perfect rate. It's about making the right financial decision at the right time for your situation.
Very cool. Well, we are visiting with Gilbert Varela, Del Norte Credit Union. And Gilbert, why don't we listen to a song here? But before we do,
Okay.
we want to give a number for people to contact you. What is the best way for people to contact you?
They can call me directly at 505-455-4667.
455-4667.
455-4667.
Okay, so call Gilbert directly, 505-455-4667. All right, so what are we going to listen to, Gilbert? What do you want to listen to?
Oh, man. Let's get something. Let's go like kind of old school. Let's do it. Let's get some Frankie.
You got it.
Frankie Valli. Let's do the Grease.
Okay, here we go. Frankie Valli and Grease. We're going to do it right now, right here on KSWV Keswabe Radio. Woo! You're listening to The Morning Show. All right, that is a great song that you picked there, Gilbert. Frankie Valli with Grease. Remember the movie?
Yep, that's our kid's favorite movie.
Yeah, man.
Matter of fact, one of our dogs is named Zuko.
I love it. Well, hey, there's an event that I want to let people know about, and we're going to get back to talking about mortgages in just a few short moments. But Coach Lucero with the Zia Basketball Club texted in, and there's a 6th grade boys traveling basketball team, and they are having a car wash and food fundraiser this Saturday, 9 to 2. Car wash, get your cars cleaned, and help support a stronger team. Great food, great cause. It's all proceeds go to support the boys on the road. And this is going to be at 1352 San Juan Drive, 1352 San Juan Drive. Also want to remind people that this weekend, on Saturday, KSWV Keswabe Radio, we're going to be joining the Rodeo de Santa Fe. And we're going to be at Capitol Ford. They're going to be grilling up some hot dogs. They're going to be there from 10 to 2. We're going to be broadcasting from 11 to 1. Want to remind people to stop on by Capitol Ford, find a new or new-to-you vehicle, and then go on over to DNCU and get it financed.
Yeah,
so how
shout
does
out
that
to
sound?
Capitol Ford.
Yeah, love the Brandt family. Mm-hmm. And so, yeah. Well, this morning, if you're just tuning in and missed our first segment, we're visiting with Gilbert Varela, Del Norte Credit Union, mortgage tips, market updates, and real talk. And Gilbert is a senior loan officer with Del Norte Credit Union, spending over 2 decades helping families across New Mexico help navigate the mortgage world. And so whether you're a first-time home buyer or you're refinancing, land loan, construction financing, long-term real estate strategies, give Gilbert a call today at 505-455-4667.
Yeah,
4667. There you go. And I'm going to repeat that a lot because I want people to get that 455-4667 because, it'll be automatic. All right, Gilbert. Maybe not a favorite topic of a lot of people, depending. But there's no judgment, zero judgment. Let's talk about credit. There's all sorts of different things going on with credit. So right. No judgment, folks. So Gilbert, let's talk about credit because a lot of people avoid even looking at it.
Yeah, and funny, it may sound, but a lot of people think that their credit is perfect, and I'm sure they do their due diligence and take care of their credit, but sometimes there's usually an error on their credit report.
Yeah, and some things we may not think about.
Right. Like, give you for instance, most recently, I have this one member who told me, hey, I need to get a pre-qualification, and I asked him, okay, well, how's your credit, what have you, and he said that I got perfect credit. I said, okay, great. So we did the application, we pulled the credit, and his credit was lower than what he expected it to be, and so basically, an insurance company made an error and put him on collections, and he didn't know about it. So therefore, I gave him some instructions on that. But honestly, that's one of the biggest mistakes people can make. Your credit impacts almost every major financial decision. Buying a home, your interest rates, car loans, insurance rates, even sometimes employment opportunities.
I couldn't agree more, man. It is so important, and I think people need to know where to start. Where should people start?
The best place is annualcreditreport.com. Annualcreditreport.com. That's a federally authorized website where consumers can review their credit reports from all three major credit bureaus for free.
Okay. All right. So this is something everyone should do yearly?
Absolutely. At a minimum, once a year. Honestly, even more often is smart. People should review their payment history, account balances, collections, accounts that they don't recognize, potential fraud or identity theft.
Do you see errors often?
Often. I do see errors often, like regularly. That's why I talk about this a lot. More often than people think, I've seen incorrect late payments, duplicate accounts, collections that should have been removed, and even accounts belonging to someone else.
And all of that affects the scores?
Absolutely. Even small errors can impact your score and affect your ability to qualify for financing. It's like that one scenario I just gave you, that was 100 points.
Wow.
Yeah.
That's a big deal.
Yep. Huge.
So what makes up a credit score?
The biggest factor is payment history. That's why paying on time is crucial. Then after that, credit utilization, length of credit history, a credit mix, and new inquiries. A lot of people don't realize that maxing out credit cards can hurt scores quickly, even if payments are made on time.
Okay. All right. So understanding credit gives people more control.
Exactly. Credit is mathematical. Once people understand how the scoring system works, they can improve their score wisely.
Okay. All right.
Yeah. So the earlier you understand your credit, the more financial opportunities you can create for yourself.
Okay. All right. All right. This is good stuff, man. I'm learning a lot this morning.
It's too early to learn.
Yeah. Well, good thing I got my jet fuel. Got my jet fuel going on here with Gilbert Varela, Del Norte Credit Union, and we got a next song here. You picked another song here.
Yeah. Let's play some Bob Seger.
Okay. All right. So
let's get it going. Let's get the blood flowing.
Okay. So this is what song do you want to play?
Let's get the old time rock and roll.
All right, man. I like your style, Gilbert. When we come back, we're going to visit again with Senor Gilbert Varela Del Norte Credit Union, Senior Mortgage Loan Officer. Give him a call today, 505-455-4667. We will be back with more in just a moment. All right, we're having a lot of fun this morning hanging out with Gilbert Varela, Senior Loan Officer with Del Norte Credit Union. 505-455-4667. And we're going to get into another segment in just a few short moments, but we did have a listener call and text Gilbert. Listener said, why can there be different credit scores between reports even though it's the same information?
Okay.
So I guess they're talking about like whether it's Experian, TransUnion, Equifax.
Right. All right, so you have what you call FICO scores, right? And those FICO scores are Experian, TransUnion, Equifax. And question is, why do they vary? And that's a great question. Different lenders report to different bureaus. Not every bank, credit card company, or lenders report to all three bureaus. One lender may only report to Experian, another may report to Equifax and TransUnion only. So each bureau may have slightly different information about your accounts, your balances, or your payment history. So yeah, and since we're on the FICO thing, a lot of people don't know that when you're applying for a mortgage, we use your middle score. So you have you have all three bureaus, and you'll have a high score, low score, and a mid score, your middle score. We use the middle score.
Okay,
yeah,
right. Make it fair.
So just for a little bit more information on that.
Great question.
Yeah, that was a good question. Thank you for asking that.
Hey.
And if you have others, send a text us. Let us know what you got, what questions you may have.
Yeah, we have the expert in the house. If there's other great questions out there, feel free to call or text our studio line, 505-989-7441. Hanging out with Gilbert Varela, Senior Loan Officer, Del Norte Credit Union. Okay, Gilbert, let's talk about home equity.
Yeah.
A lot of homeowners have built up equity over the last several years.
Yes, absolutely. For many homeowners, equity is one of the largest financial assets they have.
And Del Norte offers different ways to access that?
Yes. At Del Norte Credit Union, we offer both home equity lines of credit, better known as HELOCs, and fixed-rate second mortgages.
Okay, so let's start with the HELOC. Did I say it right?
Yes, you said it right. HELOC.
Okay.
A HELOC works similar to a revolving line of credit. Borrow what you need, pay interest only on the amount you used, access funds over time, and it gives homeowners flexibility.
So it's not just one lump sum?
Exactly. Okay. You can draw funds as needed during the draw period. A lot of people use HELOCs for home improvements, emergency reserves, debt consolidation, investment opportunities, helping family members, and education expenses.
And how is the fixed second different?
The fixed second mortgage is more structured. It's a fixed interest rate because the home equity line of credits are adjustable rates, just like a credit card. But the fixed seconds the rates are fixed. Fixed monthly payment. You get the lump sum up front. So it's ideal for homeowners who know exactly how much money they need. Okay,
well, what's one of the biggest advantages then right now?
Okay, well, one of the biggest advantages is homeowners can access their equity without touching their low first mortgage rate, which is big because everybody has, rates in the 2s and the 3s on their first mortgage. A lot of people refinance into rates in the 2s and 3s years ago instead of refinancing the entire mortgage. They can leave it alone and use a home equity line of credit or fixed second instead.
Okay, all right, there you go. That's good information, man. Because I was just kind of curious about that. That makes a lot of sense in today's market.
Exactly, and about using your home equity wisely while protecting the financing you already have. Yeah.
All right. Hey, very cool, man. Thank you. Appreciate that. And again, folks, if you have any questions, 505-989-7441. Text our studio line now. After the show, if you want to connect with Gilbert, 505-455-4667. 505-455-4667. How about something from Leo Sayer?
Let's try it.
You want to listen?
Yeah.
All right. So we got a song from Leo Sayer here on Suave Radio. Man, this is a nice morning song.
Yeah, it is.
All right. Leo Sayer, You Make Me Feel Like Dancing. Good morning, everybody. Hanging out with Gilbert Varela, Del Norte Credit Union. Give him a call today, 505-455-4667. Gilbert is a senior loan officer with Del Norte Credit Union, 2 decades helping families from first-time home buyers to refinancing, land loans, construction, financing and long-term real estate strategies. Gilbert, another question came in through the text line. I want to say good morning and thank you to a listener for texting in this question. Says here, for seniors over 62, how can a reverse mortgage help in comparison to a HELOC or equity loan?
Okay, well, those are two very different types of loans.
Okay.
So let's break that down. So a reverse mortgage, which we don't do, but I know about reverse mortgages. Reverse mortgages, basically, you can refinance your home into a reverse mortgage, and you can pull out X amount of dollars. And what happens is that you have an option every month, whether if you want to make a regular payment to your mortgage or not. And on reverse mortgages, if you don't make a payment every month, then it gets tacked onto your principal every month that you don't make that payment. So that's what those reverse mortgages, in a nutshell, what it does. And so for seniors, some of them have been in a home for at least 30 years.
And they have equity.
And they have got quite a bit of equity. And they're, maybe on just Social Security. And of course, things are getting a little pricey nowadays, right? So they can get on reverse mortgage and, they don't have to make that payment. And it gets just added to the principal every month.
Okay.
And so I'll go up to a point, though, up to a certain loan to value on those reverse mortgages. And so that versus a home equity line of credit or a fixed second mortgage, that's, I don't know if this person has a mortgage right now or if their house is free and clear, but a fixed second mortgage or a home equity line of credit, you're just actually pulling an additional loan on your house.
Okay.
And although our fixed seconds are pretty low in rate, and you won't have to touch your first mortgage if you have one. If you don't have a first mortgage, the only way you can get is a home equity line of credit, because HELOCs are the ones could be in first position. Okay. Or second position. Okay. So it really varies in the person's situation, the scenario.
Okay.
Yeah.
So it may work for some, may not work for others. It just depends.
It really depends on the whole scenario at whole. Yeah.
And if they call you, they can set up a meeting, and you can go over all of that.
Of course. Yeah.
In detail.
Yeah.
And really appreciate the question. Look at these smart questions we're getting this morning.
I know, it's wonderful. Keep on, and I'll be happy to answer them. And if you have, there's no dumb question.
That's right. Any question you have, folks, you can ask, no matter what it is. No judgment. And Gilbert will answer it. Thank you so much. Great couple of questions there with that. Gilbert, let's finish with strategy because this program has been getting a lot of attention.
Yes, it has. One of the strongest financing strategies we're seeing right now is our 10-1 ARM program at Del Norte Credit Union.
Okay, and for people listening, explain exactly what that means.
This loan gives buyers a fixed interest rate for the first 10 full years. That means your principal and interest payment remains stable for an entire decade.
And why is that important right now?
Because the interest rate is typically almost 1% lower than a traditional 30-year fixed mortgage. The lower the rate can create a significant difference in payment.
So that helps with affordability?
Helps with affordability and helps with pre-qualifying as well. Yeah, and so it can help buyers lower their monthly payments, increase buying power, improve debt-to-income ratios, keep more monthly cash flow available.
What are some of the major features there with that?
Here's what it makes this program stand out. 10% down, no mortgage insurance, fixed rate for 10 full years, then annual adjustments after 10 years. But there are also important protections built in.
What kind of protections?
There's a 2% annual cap, meaning that the rate can't jump dramatically all at once. And there is also a 6% lifetime cap, which limits how high the rate can ever go over the life of the loan.
So there are guardrails in place?
Exactly. And realistically, many homeowners refinance, move, or upgrade homes or change financial situations before that 10-year period even over.
So who's this best designed for?
This is ideal for buyers who want to lower payments today, expect rates may improve in the future, want to maximize affordability, may not stay in the home forever, or simply want a smarter approach in today's market.
So instead of waiting on the sidelines, that gives people another option.
Exactly. And a lot of people are waiting for rates to drop, but while they wait, home prices can continue increasing, rent keeps rising, and affordability changes. This gives buyers ways to move forward now while still keeping flexibility later. The 10-year ARM program allows buyers to lower their payments, avoid mortgage insurance, lock in stability for the next 10 years, and position themselves wisely for whatever the market does next.
Great information today, Gilbert.
Absolutely. And I appreciate you having me on. If anyone listening has questions about buying a home, improving their credit, using their equity in their home, or